Netflix will report results tomorrow after the close. To prepare, we're going to take a look at our Netflix earnings model and see where consensus estimates stand relative to management's guidance. To do this, we'll be using our Netflix earnings model, which you see on the right-hand side of your screen. And if you'd like to download this model and follow along, please visit our website, gutenbergresearch.com. Click on the Free Models tab, and from there you'll be able to download Netflix as well as any of the other companies that we cover. And while you're there, if you're new to our approach, please click on the model document that you'll find on the home page. And this document explains the entire financial modeling and equity valuation approach that we use. So with that, let's get started. To access management's latest guidance, you can go to the Investor Relations page and click on the third quarter letter to shareholders. And you'll see on the first page of that shareholders letter, management gives guidance for a number of items for the fourth quarter. So if you take a look at our model, scroll down to the segment details, you can see that we've essentially left the growth rates for DVDs pretty consistent with last quarter. Overall, we're expecting about $5 million of revenue from DVDs, so not much there. Management doesn't actually offer guidance on DVD, but it's not a significant portion of the business any longer, so it's not a big deal. Now, for the international streaming business, you can see by these purple cells that we've left the entire international streaming basically equal to management's guidance. So revenue, they got it to $566 million, and that's what you see here. We've got total paid members at 27.1 million, which is about what they guided to, and contribution margin of negative 20.7%, which you can see right here. So really the only variability that we introduced is in the domestic streaming business. And the reason we did that is we're trying to calibrate our model to meet consensus estimates ahead of tomorrow's release. So since the consensus revenue, implied revenue number was a little bit higher than the guidance that management gave, if you include that $5 million from the DVD business, then, I'm sorry, $153 million from the DVD business, then at that point we needed to change the US streaming. So this is really where we're different from the guidance that management gave us. So the total members we have at 43.4 million, and that piece is consistent with what management gave us. But the domestic streaming revenue per average paid member, which is implied by the guidance from management, we actually increased that slightly to get to a total revenue number of $1,108 million versus the $1,101 million that management guided to. So essentially, the street is slightly ahead of management's guidance on the top line revenue line, and that again depends on what your estimate for the DVD business is. Now from there we can go down the income statement. Operating income, management guided to approximately $49 million. So the street is slightly ahead of that, but not by much. So we left this pretty close to the guidance that management gave us, maybe $1 million more. And then when you get down to the net income line, we're actually dead in line with management's guidance. And then the implied EPS of 2 cents is also in line with management's guidance. And keep in mind that management stopped reporting non-GAAP diluted EPS. They usually give some notes around it, but they also give details on stock-based compensation, so you can go ahead and calculate a non-GAAP EPS estimate if you'd like. There's also one other important thing to note when you look at our final non-GAAP income number, and that is that the effective tax rate is pretty high relative to the past couple of quarters. And the reason is that we're including the $39 million tax accrual release, which is related to the resolution of the recent tax audit. That was included in management's shareholder letter, and we'd expect to see that come through earnings this quarter. So that's why it's higher, and we didn't break it out into a separate adjustment. So overall, the street is pretty much in line with management's guidance for this fourth quarter, slightly ahead on the revenue line, but at the bottom line EPS estimate in line. Of course, if we see some big subscriber growth expectations for next quarter, the stock is going to move one way or another. So after the call, be sure to check back with us and we'll update this earnings model and see where the new valuation comes out. Also, be sure to join us later this week for the Starbucks release. And if you're interested in financial modeling, please be sure to subscribe to our page. Thanks for watching.